we will go further and give you an overview of the underwriting process. As already mentioned, since the launch of operations in 2008, Bondora has processed more than 1.5 billion euro worth of loan applications and issued over 85.1 million euro in loans. So we can claim to have gathered significant experience in credit scoring and borrower data verification. I will shortly introduce the stages of a loan application and its analysis. The underwriting process consists of 6 stages. They are borrower application, borrower identification and fraud detection, data collection and verification. After that, Bondora will apply the risk scoring and develop loan pricing. The final stage then is signing the loan agreement and paying out the funds to the borrower. We have already developed a high level of expertise in the countries we operate in, namely Estonia, Finland and Spain. And we use a proprietary credit scoring database, which also provides insight into customers' behavior. We use all the collected and available data in order to calculate the risk rating. The underwriting process itself is largely performed automatically by Bondora's proprietary IT systems. Processes requiring manual input, which include taking in borrower supporting documents and related data entries, are also automated to the greatest extent possible. The underwriters rely on a detailed written underwriting policy and anti-money laundering policy, with both of which are updated regularly. In addition, they have access to extensive documentation on risk scoring and loan pricing processes. We employ an internally developed credit scoring model, using all of the data collected in earlier steps in order to calculate a prospective borrower's risk rating. The exact variables that influence credit risk ratings are determined and adapted as needed through statistical analysis. These may include information, income information, employment records and credit history, as well as marketing and other non-traditional data. Scorecards are then prepared by Bondora's Consumer Credit Business Unit Scoring and Price Team and signed off by the unit's head of credit risk. Scorecards are regularly evaluated and calibrated. In general, scorecards provide a 1-year forward-looking estimate of the expected loss. That means the proportion of gross interest not received due to loan credit losses. Based on this data, loan applications are assigned a Bondora rating ranging from AA, which is the safest grade, to F and HR, which are the riskiest investment grade ratings. Let's have a look at the different stages of underwriting from the viewpoint of the borrower as well. In the first stage of the loan application, the borrower will have to enter all the data himself, including personal and contact information, socio-demographic background, employment info, income and outstanding liabilities, and of course to provide the supporting documentation. In the next stage, data collection and verification includes the data provided by the borrower, as well as data available in the local credit bureaus, population registries and property registries of each separate country. The customer can either send us the supporting documents, such as bank statements and payslips, or have his bank account information verified directly by a third-party provider. We also look at behavioral data from third-party vendors, social networks, or server logs. It is also important to mention that if there have been any previous applications from the same customer, we always compare the current data with the past one as well. The next stage then will be identification and fraud detection. This is where we will first verify the borrower's email and mobile phone number. We check the his registered address through the population registry, and the bank account verification will mostly be done through a third-party provider, as already mentioned. We also trust the banks to send us the correct and needed information about the customer as soon as he makes the first payment to identify himself. Under the step, it is important to know that we will look at 3 main points: whether the borrower's income is verified, whether both his income and expenses are verified, and as a third option, if none of them are verified. In the latter case, the risk level will of course be higher for this customer as well. The next step is risk scoring, where we calculate a risk rating using all the collected data. Variables are adapted through statistical analysis and a scorecard will be calculated. Just to confirm, the scorecard provides a 1-year forward-looking estimate of a loan's expected loss. Next, there will be loan pricing, where a lifetime cash flow model is constructed using the risk scoring results, and the expected return is calculated as well. All this data is used in order to establish a fair interest rate for the borrower. The last stage is then the signing of the loan agreement and issuing and paying out the loan. The loan agreement will be signed by the customer, as well as the standard European Consumer Credit Information form. After that, the loan will be paid out. It is also important to know that underwriting is managed by a team of highly experienced and skilled professionals and supported by 6 data engineers, one of whom has a PhD in economics, 2 who are PhD candidates, and 3 experienced software engineers. One question that often comes up from our investors is how many loan applications are actually successful. So on average, we can say that only 10% of the loan applications are approved by Bondora. So concerning that, I will also quickly go over the stringent policy rules of Bondora. All borrowers will have to be applicable to these rules. First of all, the borrower has to be a resident of Estonia, Finland, or Spain, and at least 18 years old. The income of the borrower would have to be at least €1,000 net per month in Finland, €600 net in Spain, and 300 net in Estonia. The loan itself can be a minimum amount of €500 and a maximum amount of €11,000. The aggregate outstanding amount of loans issued by Bondora to the same borrower may also not exceed the €11,000 mark. The loans have a term of not less than 3 months and not more than 60 months, which is 5 years. The loans all have Bondora's internal credit risk rating from AA to HR. Annual percentage rate of the loan at the time of concluding the credit agreement must be less than statutory limits in the specific country. Loans must be paid in monthly installments. And last but not least, the borrower, of course, should have no active delinquencies with local credit bureaus.